Peter Thiel studied under Sam's dad.
I didn't realize that either. Actually, I didn't realize that until right now.
I'm blown away. You know who comes in 8th on the list of donors to Democratic Party? So Soros is number 1. Sam was number 2. You know who's number 8?
Who?
Peter. Wait a minute. Peter was the guy who Trump was so buddy with. You know, on the Friday where we had a collection of us that were ready to fund BlockFi so that they didn't have to take the FTX deal, Peter Thiel's group backed out. No explanation.
Since the beginning of the entire Sam Bankman-Fried, Kevin O'Leary, and Binance fiasco, Mark Yusko, the founder and managing director of Morgan Creek Capital, has been doubling down on claims that the entire situation has been carefully orchestrated by higher powers to get the digital assets industry under control. In a recent interview with Blockworks Macro, the renowned fund hedge manager spills the tea on exactly how high up the conspiracy goes. Yusko also gives his opinion on the FUD that continues to surround popular cryptocurrency exchange Binance and its chief executive officer Changpeng Zhao. Yusko agrees that Kevin O'Leary's claim that Changpeng Zhao is almost solely responsible for the FTX collapse is completely ridiculous. But he doesn't believe Changpeng Zhao and Binance are completely on the straight and narrow, especially in terms of business practices. In his interview, Yusko questions the role of the BNB in Changpeng Zhao's crypto empire, adding that SBF's overdependence on his FTT token is one of the reasons for the exchange's collapse. Mark Yusko is just one of the many people that have made such observations recently. Earlier in the month, popular on-chain analyst Willy Woo made similar observations in a string of tweets, some of which Changpeng Zhao replied. In one of his tweets, Wu points out that Binance Secure Asset Fund for Users, SAFU, was 44% BNB, 32% BUSD, and 24% BTC. In the tweet, Wu states that he commends Binance for having such a fund, but that BNB had no reason being in the fund because it is incidence correlated. How would we feel about FTX having an insurance fund filled with FTT, he queried in the tweet. Here is Changpeng Zhao's reply to Wu's observations. Binance SAFU Insurance Fund, $1 billion equivalent, is roughly split between BTC, BUSD, and BNB. It's just that BNB's price rose faster than BTC since the last rebalance. And Wu counters by asking, what's the reason for putting BNB there, given that it is highly incidence correlated? In the case Binance has an incident, BNB would drop quickly, just as BNB rose quickly due to liquidity dynamics. In that regard, BNB in the fund bolsters a vanity metric. For authentic communications, I'd suggest Binance dashboarding SAFU fund partitioned by correlated and uncorrelated assets relative to Binance customer funds being protected. For example, customer assets $60 billion, SAFU USD $333 million, BTC $333 million, and BNB $333 million. I think the SAFU initiative is fantastic, hoping it leads other exchanges into similar actions. Here you have an opportunity to set a high standard for the industry. After Binance released its proof of reserves, Wu also asked why the exchange's liabilities are not on the report. His tweet reads, will you be doing an independent audit on liabilities against those reserves, and will other coins be audited also in due time? To which Changpeng Zhao replies, yes, but liabilities are harder. We don't owe any loans to anyone. You can ask around. While Changpeng Zhao continues to maintain that the exchange owes no one and does not have to publicize its liabilities, many people have problems with his vague explanations on the subject. In November, former Kraken Chief Executive Officer Jesse Powell said that Binance Proof of Reserves report is pointless without liabilities. In his interview with Blockworks, Yusko raises similar concerns while also discussing his observations about the FTX fiasco. Before we listen to Mark Yusko, please take a little time to like this video, subscribe to the channel, and don't forget to drop your comments and observations in the comments section below. Thanks, and enjoy the video.
The issue for me in Binance isn't necessarily the functionality. I'm struggling for the right word here in my English. It's not the the methodology is the word I'm thinking of the reserves, which I think you're right. It's lacking. I think for me, the issue is how closely does BNB represent or associate to FTT? As I understand it, and I hope to be proven wrong, but as I understand it, they're kind of the same. They're utility tokens that don't actually give you a share of equity, debt, or a claim on cash flows. And if that's true, okay, then you have the risk, just like with Cell, just like VGX, just like with FTT, that if you use that asset as collateral, it's just a Ponzi. I mean, that literally, because there's nothing behind a trading coin, a meme coin, which is essentially what it is. If there's no, claim on cash flows or ownership, it's not a real asset. And so my question is, the question is how much of the BNB is used in the balance sheet of Binance in the same way that FTT was used in FTX, because that's ultimately what led to the downfall.
Totally. I just want to clarify that there's one big difference between BNB and FTT, which is that Binance actually does have Binance Smart Chain, which, whatever you think about it, actually has an enormous amount of utility. And BNB is the native token of Binance Smart Chain in the same way that Ether, the token, is the same native token of Ethereum. If
it had a claim on cash flows, then I would feel better. But let's just assume for now that it doesn't. And if it doesn't, and it's simply a trading token like Ethereum, I'm fine with that. Yeah. But if he's used it to secure loans the way FTT, I mean, the problem for BlockFi, for example, is not that they did all these things. I mean, a couple things. So Ben Hunt, who you had on the show, is wrong, right? He's referring to the FTX bankruptcy filings, which why the world thinks those are accurate, I don't understand. And FTX claimed that these were unsecured loans. Of course they claim that. They don't want to admit that they were not unsecured loans. They were secured loans. And I can validate that as a factual statement. So the assertion that they're unsecured loans is wrong. The second thing is, when they made the loan, it was actually a small percentage of their total assets. Right? They had $20 billion in assets at the time. And so a $700 million loan isn't that big deal. Now, when assets fell because of the crash and of withdrawals, then it becomes a big deal. The real issue was the collateral. All the collateral up until that particular loan had been either stablecoins or Bitcoin. And the question is, and I actually have, this is not public information, so I don't have any insight here, is whether there was originally Bitcoin or stablecoin and that post the merger, Sam or somebody at FTX changed. I just don't know the answer to that. But at the end, on the date of the bankruptcy, it was FTT, which has no value. And that's the problem. And that's what I'm concerned, because I don't worry about BUSD, right? That seems to be pretty well backed. I don't worry about the structure of Binance, because it's, proven over and over and over again to be a pretty good, darn good exchange. What I do worry about is if BNB is being levered and used as collateral.
Lots of questions have been raised about Binance and BNB over the past week, especially after the accounting firm working on its proof of reserves report pulled out of the deal. According to reports, the Big Four accounting firms Deloitte, Ernst & Young, KPMG, and PricewaterhouseCoopers are reportedly unwilling to audit Binance. Yet, Deloitte, which works with rival exchange Coinbase, has not announced any intention to stop auditing the crypto firm. Experts have also noted other red flags about Binance proof of reserves, especially how it categorizes Bitcoin lent out for leverage trading as part of its assets. The proof of reserves reports also equates BTCB and BBTC, which are wrapped Bitcoin on the Ethereum and Binance Smart Chain, to regular BTC. Let's get back to Mark Yusko's interview as he discusses his opinion about the U.S. government's role in the FTX collapse.
I absolutely believe that was not rogue Kevin. I believe that was an intentional plan. I don't think anything in these congressional hearings is accidental, right? They invited this idiot professor, I can't even remember her name, who spewed incredible amounts of nonsense, like just factually incorrect data about blockchains and crypto. And I mean, there are plenty of smart people they could have invited in. There was some other influencer that they invited. What the hell? Right. It is not incompetence. It is intentional obfuscation of the facts to get an outcome, right? The outcome that these people want is the Warren legislation and people hate in China. Those are the outcomes that people want. And if we blame China for this, and we get, I mean, this is akin, right? This is a 9/11, Patriot Act moment. This is a, global financial crisis, Dodd-Frankenstein moment. You're telling me that however many 100-page bill was written in the last 2 weeks? Are you freaking kidding me? No, it wasn't. It's been in the works for months and months. And just like it's not a coincidence that Bitcoin's birthday is in the middle of the global financial crisis, it wasn't created on that day. It was created for many months, even years before. It was released precisely at an exact time. And there's a whole bunch of other stuff that is truly disconcerting now. I had no idea that Peter Thiel studied under Sam's dad.
I didn't realize that either. Actually, I didn't realize that until right now.
I'm blown away. And you know who comes in 8th on the list of donors to Democratic Party? So Soros is number 1. Sam was number 2. You know who's number 8?
Who?
Peter. Wait a minute. Peter was the guy who Trump was so buddy with. He's the number 8 donor to the Democratic Party. So there's a whole bunch of stuff going on. And I this is the first time I'm going to say this publicly. And I've said it before, kind of naming names. But, on the Friday where we had a collection of us that were ready to fund BlockFi so that they didn't have to take the FTX deal, Peter Thiel's group backed out. No explanation. Just, we're not going to do it. They had $330 million invested in this company, and they walked away. Still makes no sense. All you had to do is throw in 50, 60 million bucks, which to Peter is like me putting a $5 bill out of my pocket. And it just hit me right now, live. That wasn't an accident. I don't believe that was an accident. And I think this is all a very, look, and you and I will disagree until it's proven one way or the other. But I think this is a very elaborate, I think there's nothing accidental. Of course you put on a clown show, because it's not accidental that SBF was supposed to testify, right? Oh, he's arrested. He's detained. Okay. But he happens to have this perfectly typed out transcript that just gets leaked. And we haven't talked about the Warren bill. That should make everyone who's listening to this.
It should. I think that's not going to pass
podcast.
Though. The Warren bill.
I hope you're right. If it does, this is a very, very difficult road to hoe.
Yeah.
And if you are in crypto and you are not terrified by this bill, people say, I can get around it. I'll VPN out and I'll buy my crypto. Okay. But they're basically going to criminalize, which, look, people always said, government will just ban crypto. They can't ban crypto, right? It's decentralized. It just pops up everywhere else. But what you can do is what they've done. You can reduce confidence through this public clown show spectacle of FTX, which I believe was completely made up from day one. You can then criminalize holding it outside the system, the KYC AML system. And look, I still think, I said this last week, I used to laugh when people like Elizabeth Warren would say, oh, crypto's only used for money laundering. And she keeps doubling down on that, tripling down on that. I'm like, well, I used to laugh because I didn't realize that she had inside information, that they're the biggest money launderers. I mean, the whole FTX thing, it's a money laundering scam. Like if you looked up the word money laundering, it would show you how to do it using SBF, shell companies, transferring money from one company to another, routing it through foreign countries, banking in the Bahamas. That's what money laundering is. So I'm very concerned about.
Let us know what you think about Mark Yusko's observations in the comments section below. Are these only conspiracy theories, or is there really something much bigger happening here? In one of his more recent tweets, Willy Woo raises an important suggestion that could restore people's trust in centralized exchanges. Here is his tweet: centralized exchanges need to move to independent third-party custodians if they are to gain the trust necessary to compete with decentralized exchanges or to scale to trillions in customer assets in the years ahead. There's no reason exchanges need full access to customer assets. An independent custodian needs to hold a second key to approve settlements, and in some cases, institutional clients should hold a third key. In another tweet, the on-chain analyst shares a bit of good news amid all the fear, uncertainty, and doubt. After the FTX blow-up, many think it has set the industry back many years. But this is contrary to the conversations I've had. TradFi capital allocators see an opportunity to come in now. They see Bitcoin and crypto are here to stay, and it has now been de-risked. What are your thoughts on Mark Yusko's interview and Willy Woo's tweets? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and check out our other videos on Binance, FTX, and Kevin O'Leary's ridiculous claims against the Binance co-founder. Thanks for watching.